A beautiful doji of a day for the benchmark Nifty in today's trade, closing at 17,078, managing to close almost as exact as possible to the opening of the day of 17,075. So it's 3 points of gain on an open to close basis, but 105 points for the Nifty future, extending the bounce back that we have for the third consecutive trading session. Good evening traders, 23rd December 2021, 14 minutes past 8 p.m. Indian Standard Time, and we'll quickly take a look at the scans first and then we'll come back to the Nifty. So this is the InstaView scans that we do every evening on the Nifty 200 universe. And on the inside bar, we got HAL, Hindustan Aeronautics. Not the best of inside bar, I would say. Let's check the others. Neither is Godrej Industries. MFSL, belt hold kind of a behavior, not also that promising. ICICI GI looks decent because I believe it's kind of shaping like a positive divergence, a bullish Harami pattern, and an inside bar, of course. So move above 1366 can lead to some bit of movement for ICICI GI. Nestle is stuck in a pretty wide range. So when you're stuck in a range and you create inside bars, that's no big deal. So within these 6-7 names that we click through, I would suggest ICICI GI stands out primarily because of the fact that it's a bullish Harami pattern as well as supported by a positive divergence. Now sorting the bullish bearish Harami pattern in our list, let's quickly take a look at how they play out. Wipro, the first one, it is not a bearish Harami pattern, it's an uptrend. Neither is this. Trend is flattish, so is MFSL. Flattish trend. This is not a downtrend. I mean, last 2 bars cannot be considered as a downtrend. It is in a downtrend, but this formation is not so strong. Fed Bank, well, we may, but not that strong. ICICI GI we just spoke about, and then DV Slab. So none of these bullish bearish Harami pattern in today's scan actually stands out that well. We've seen recently we got many such patterns, and most of them had played out pretty well from a very short term perspective. Now quickly take a look at within the Nifty 200, which are the stocks which have seen more than 70% delivery percentage, and in terms of absolute numbers, more than 1 lakh shares. Alchem is basing out after its downtrend, looks decent. Cole Palmolive, this is a very interesting stock. Recently I've got a lot of questions asking about my views on this. So this stock is definitely trying to bottom out. If you take a look at the numbers of delivery percentage over the last 10 days, 75, 67, 65, 58, 67, 59. So close to that 65 to 75 zone for the last 10 days is definite signs that some degree of accumulation is definitely happening in this good quality counter. Emami is stuck in a range. There's not much in it. Very erratic when it comes to in terms of the flow of delivery percentage in the last 10 sessions. HDFC Bank kind of stocks are always institution favorites, and their delivery percentage numbers are always on the higher side. Yes, it has gone through a pretty sharp correction, and it seems like 1420 is acting like a short-term support for the stock. But Bank Nifty, private banks per se are still in a downtrend and weak, so would like to keep a closer look and not jump into any conclusion. ISEC very much stuck in a range, probably eyeing for a retest of its previous swing low close to that 720, 730 zone. And then VBL, not much. I think Kolpal is definite one counter which stands out in this scan of our delivery percentage. Breakout stocks where the range has contracted, the volumes have also dropped significantly. Idea looks interesting after the great run that it enjoyed. It's kind of consolidating now. A move above 14.2 can lead to some short-term movement. Nothing much in Maruti over, if we can talk in terms of breakout. Neither is Sanofi. It's already giving us a move. Hindustan Aeronautics, not really. No is neither TVS Motor or Procter & Gamble. M&M Ramco Cement back to its previous swing highs in a downtrend. It's kind of flattish, not the best breakout candidate. Idea was probably much better placed amongst these stocks that we are clicking through. Ipca Lab and AREGL, nope. Godrej Industries, nope. Then we have the next one is Fortis. The fact that the stock has created a couple of spinning tops, Doji looks interesting. Definite drop of volumes, very clear drop of range. We're stuck in a range. The good thing is it is bouncing back from its swing lows and a move above today's high 280. Maybe Fortis looks like a possibility alongside Idea. Berger Paints not bad. In fact, last 3 days high 753.5, 753.5, 753.5. Wait a minute, 753.45, 753, 753.45. So 753.5, 754 is a very interesting breakout level for Berger Paints. So within this list, I would say it's primarily Idea and Berger Paint that stands out. Oracle Long, the intraday strategy, I doubt we'll have any setups today. Not. An Oracle Short we might have because it was more of a consolidation day for the markets, and we might get some picks. MFSL in a downtrend, belt hold kind of a Japanese candlestick pattern. 953 is the level below which it can give us some weakness. Nestle definitely no, stuck in a range. DV's oversold, would like to avoid. Adani Trans also very similar to MFSL. One can look into it only if it slips below today's low, not before that. Trend stuck in a range. Indian Bank is weak. It is an Oracle short, but only below the low. Apollo Hospital has been correcting for quite a bit now. But it's a strong counter. Z, in fact, most of the media stocks weakened today. Dixon also is a stock which looks interesting below today's low. InduSInd Bank. Idea we just spoke of, but Idea seems like a breakout candidate either on the up or on the downside. So this is a very interesting stock to watch for in tomorrow's session. Amongst the others, I would say there are quite a few names, but to fall below today's low, the stocks, need to correct quite a bit. So be careful. Let's see how it plays out in tomorrow's session. But these Oracle scan results are, please do remember, are primarily only for that particular day only. Wouldn't like to initiate shorts for the over the weekend, because the markets have bounced back pretty well. It's trying to hold now. Let's see what the index has done and what we can expect. So another 100-point plus gain for the index. We spoke about 17,000, 17,100, and also it's done that. It went all above towards that 17,150 and then slipped, and now it's a little above 17K. So what a bounce back needs to be, needs to do, it has done that over the last 3 days. It fell more than 500 points, it bounced back, and it's just dealing with our resistance band. A look at the 75-minute time frame, I think, will make a little bit more sense. So I can extend this red zone a little bit to the right now. So here we are. Welcome to resistances. We have the VWAP also, though this VWAP is correct, is calculated from that low. Now if I drag it to the swing high, we can clearly see that it needs to deal with the VWAP as well. The last time the VWAP did act as a very good source of resistance. We have a little bit of volume profile playing in here. Point of control and volumes further ahead is 17,250 all the way towards 17,350, 400. So we've got the next zone of resistances that the index will have to deal with in case it runs away further. Then this is what the index will have to deal with. But it's going to be interesting to see whether it manages to sustain 17K or not. So in case we see further weakness, then psychologically, in terms of the sentiment, a close below 17K will not be looked as a good sign for the weekend, right? If it manages to close above the 17K mark, let's say tomorrow it doesn't gain so much, neither does it lose so much, just manages to hover within this range of 17K, 17,100, 150, just stays in this particular zone, they're not bad. They're not bad because this was the first leg of bounce, this was the previous first swing high, and it has broken above that swing high quite comfortably with some gaps and have consolidated. So the signs are pretty impressive. The moving averages slope has started to turn up. So any short-term correction, which is very likely in the tune of 50 to 70, 80 odd points, will find the index at 17K, and it will be the job of the 17K to hold that. If it does, that'll be good. I think that'll mean that the recent swing low is probably done, and we should expect further upsides. If not, this is where we are. This is the crucial juncture. I think we can call it make or break, but the index can take its own sweet time to consolidate for 2, 3 or 5 days. So definitely a very interesting juncture for price. We'll remember, if we have a weekly close below 17K, it's not such a good sign, or else we're well sorted and we can expect the index to do better, further better from here on. The issue might come from the Bank Nifty, because the Bank Nifty has definitely shown some signs of weakness. If you allow me to drop an anchored VWAP from this particular swing high, it is taking a 2 standard deviation. Nowadays, TradingView allows us to drop standard deviations. That's a nice thing with the VWAP. So you can see this is where it held the last time, and this time it didn't have the strength to go all the way and touch the VWAP or this previous swing low. So this is a sign of weakness, by the way. When you fail to do that, it's a sign of weakness, and it's taking a shape of a rising wedge, downtrend, rising wedge, continuation on the downside. It has fallen quite a bit over the last 2.5 hours trade in today afternoon. So Bank Nifty continues to be the pocket of worry for the overall markets, though it has bounced back from supports just like the Nifty, but this is an important pocket, which means that if the benchmark Nifty fails to sustain 17K and it starts to show some fresh signs of weakness, and if you are into short trades as well, then you'll do good for yourself if you focus on the pockets of weakness like banks, especially private sector banks and financial services, etc. Try not to short the IT just because it has gone up. That's not a very good idea, right? So banks and financial services can be the drag for the index going forward. Let's see. It has done pretty good for itself, and now it should sustain. ITC, the biggest gainer amongst the top stocks, is a rare phenomenon, and ITC is moving. So congratulations if you're holding onto the stock for decades. I'm sorry, not decades, a few months, but yes, underperforming for sure. Infosys is definitely a leader, and if you remember, for the last few months we've been talking that this is the consolidation, it's angling down, but it didn't break down. In fact, it has picked itself up on the upside, new life high. Congratulations, IT is doing really good. Amongst the PSU banks, SBI not that bad, a beautiful doji on the charts, right at the gap. So playing out like a Tasuki gap, not exactly a classic Tasuki gap, but can be a sign of continuation on the downside. So as I click through sectors and these stocks, I get mixed feelings. I get pockets of strength like this guy, TCS, catching up with Infosys, trying to catch up with Infosys. I get clear signs of weakness from the Bank Nifty and few banking heavyweights. So it seems like the index is still under a little bit of pressure, may stay under a little bit of pressure, and we need to keep that extra carefulness as we trade through the last few days of the calendar year. Foreign institutional investors, of course, will enjoy their holidays now, and liquidity wise from their side generally tends to be sub-average till the first few days of Jan 2022, and you'll notice that post the 3rd or 4th of Jan, the momentum and the liquidity will kick in. And so any kind of big trends, sharp trends up or down, I don't see it happening immediately, but maybe in Jan. So till that time, stay prepared, trade light, and stay with the underlying trend, which is still down. So trade carefully, right? All right then, time for me to wrap up today's market analysis. Take care of yourselves, trade well, trade wise.